Welcome to the channel. I'm the Swedish Dividend Investor. So, today I want to talk a bit about high yield, taxes and some strategies regarding these. I will also go through a new portfolio I'm starting, so bear with me during my yapping, and I will go through everything at the later part of the video. As some of you might have catched, I like higher yielding assets. Not all of my assets are high yielding. Some yield around 4%, like HP Inc. When I started buying, I think the yield was just above 3%, but I lean more towards higher yields. My portfolio yield on cost is around 6.8%. Now, why do I like high yields? Simply, I can get a higher cash flow for reinvestments, and the day where the portfolio covers my expenses will come a lot faster than if my yield on cost was like 3%. Just to do some simple calculation, let's say I need $2,000 per month after taxes to get by. That's $24,000 per year. Now, to calculate what we would need to invest to get that kind of money, we simply divide the desired amount by the percentage yield. So, if we go by my portfolio yield on cost, 6.8%, we can see I would need around 353k invested. But this would be pre-tax. If we discount the yield by 15% for taxes and for simplicity, the yield on cost after taxes would be 5.78%. So let's go with 5.5 for some margin of safety here. So we take 24k US dollars and divide it by 5.5%. We get 436k roughly. Now, if I went with a yield on cost of, let's say, 3.5%, your typical yield for safer investment like Coke, PG, Pepsi and whatnot. Pre-tax, that comes out to 685k roughly. So we discount the yield to remove the 15% tax and we get 2.97%. And when we do the same calculation, we would need a portfolio of 808k. Now, some of you might think, higher yield, higher risk. And yeah, that can be true. But that doesn't mean low yield, low risk. Take 3M for instance. They had a dividend growth streak of over 65 years. The yield was low, but what happened? They cut their dividend. I know, because I was a shareholder of 3M. Luckily for me, I got out just above break even after holding on to it for a while. Some assets are risky, like mortgage REITs. Usually, if you see a yield of 15%, that could signal some trouble ahead, but not always. If we talk about BDCs, business development companies, they don't have to pay taxes on their profits if they distribute 90% of their earnings. So naturally, the yield will be higher. It all comes down to doing research and keeping track of the company's financial situation. So I don't buy into the high yield, high risk or low yield, low risk thing. I think something could be high yield, moderate risk or low yield, high risk. Nvidia. Some viewers have left some comments talking about taxes, like Rado Antonescu 2519, talking about Exact Edge DIV, Exact Nordic High Dividend Low Volatility ETF. He said he can buy it, but the dividend tax in Sweden is at 30%. That's the withholding tax for him, I guess. You always have to see what the taxes are in your country and see how it fits you. Some countries have tax treaties between them. For example, Sweden and USA have a tax treaty of 15% withholding tax. Now, I don't know if this goes both ways, but I would guess it does. You can always discount the taxes from the yield and see how it fits you. Another viewer from Italy, Kiyagi72, informed me they have to pay a 26% tax on dividends. And he is more or less forced to look for higher yielding assets, since a 3% dividend yield would be too small. My stance on taxes are pretty apparent sometimes, but we do have to pay them. I use a tax sheltered account, so I don't get taxed on my dividends. And I can deduct withholding taxes or get a tax refund to my broker account. But the tax I have to pay is around 3% on my total portfolio value. With that kind of account, I can't offset taxes with losses. If the value of my portfolio goes down, I still get taxed every year, even if I don't sell. So we all pay taxes in some way. Some pay more, some pay less. Like I said before, always take your tax situation into account and see how it fits you. So, that's a pretty good segue to the main topic of the video. I'm starting a new portfolio. Now, I will be lumping it together with my regular portfolio when I show my dividend tracker or when I go through my monthly dividends. There are some reasons why I wanted to do a separate portfolio. First reason, I found a Swedish broker with a tax-sheltered account where I can buy BDCs. Last year, the EU decided that BDCs are way too complicated for us plebs to buy. They fall under MIFID and PRIIP regulation, if I got that right. I could buy them using a broker like Interactive Brokers, but that would mean I have to use a regular account and not a tax-sheltered account. So, Swedish investors, keep this a secret so the Brussels heads don't catch up. The second reason, I want a separate portfolio to track, because this will be a high-yield portfolio, so we can see over the years how everything is looking, dividends, gains and total return. This could be a great example to see if high yield equals high risk, or if you live in a country with high dividend tax and need that higher yield to make some income. The third reason, I want to be able to transfer my holdings back to my main broker if I can't buy the assets anymore. See, I mostly use a capital insurance for my foreign holdings. I won't bore you to death with all the details, but basically, it is a tax-sheltered account where the bank or the insurer owns the assets. They do all the tax work and can even get a full tax refund, even if the deductible 15% gets exceeded. For instance, Norway has a 25% withholding tax, but I get a full refund. Anyway, the problem with this account is that I can't transfer the holdings. I have to sell the assets, move the money to another account and buy the shares back. That would be a lot of fees and commissions. If I use a regular tax-sheltered account, I can move my assets, but I might not be able to get all the withholding taxes deducted. So, on to the portfolio idea. I made a spreadsheet, as always. What I've done here is to reverse engineer what I would want to get paid after taxes. Let's go through the first company, Capital Southwest, CSWC. This is a very old BDC, started in the 60s. We see the price, the yield, annual dividend, monthly dividend. I just divided the dividend by 12. So even if they pay quarterly, it doesn't matter. We also have currency. Here I just multiplied the monthly dividend by 9.2. The dollar is around 9.5 at the moment, but I want some margin of safety here. The next one is after tax. I remove the withholding tax of 15%. And we also have the desired after tax income per month. I use this to figure out how many shares I need to get 100 Swedish crowns per month on average. Let's reveal the holdings. Now, I want to start by saying, I will add to this portfolio over time. So some companies will go up or down in price. And I will probably do a stock analysis on each of the companies as we go. I've manually entered the price for two holdings here, Hercules Capital and Main Street Capital, since I find them a bit too overvalued at the moment. But that's the beauty of investing over time. I've put what I believe is a good entry price for them. $16.5 for Hercules and $50 for Main Street. At the bottom of the list, we see something that looks bonkers. YieldMax Big Tech. Yeah, so it looks like we Europeans have gotten access to some extreme high yield ETFs right now. This one is yielding over 25%. I know these ETFs are extremely stupid. Most of them lose their net asset value extremely fast. But it could be fun as a very small position, just to see if this idea is really stupid. I have my doubts. You can also see I didn't discount the dividend here, because this ETF is based in Ireland, and by no means is this the final portfolio. I could change my mind about the holdings. I just want to have something to go by. The next page is the allocation. Since the portfolio is weighted by income, some holdings will be larger. Maine is a great example, with its 6.12% yield if I can buy it at or under $50. I would need to invest $2,500 compared to under $1,500 if I invest into OBDC, or 500 euros if I go with the Yield Max ETF. I also converted the dividend to euros here, since the share price is in euros, but the dividends is in dollars, so the yield is euro adjusted. At the bottom, we can see I would need to invest roughly $9,500. That's 8,100 euros, or 91k in Swedish crowns. I would get a dividend of $897 per year, 766 in euros, or 8,500 in Swedish crowns. I'm rounding some numbers here. We can also see the yield on cost of all the holdings combined are sitting at 9.38%. If we go back to the first page, I can always change the amount of income I want. Let's go with 170 Swedish crowns, roughly $18 per month and holding. So a total of 1,020 Swedish crowns per month. That's roughly $107. We can see the share count changes. If we look at me now, I would need to invest $4,200 roughly. And if we look at the grand total, I would now have invested $16,200. That's 13.8k euros, or 155.4k Swedish crowns. And I will be getting a yearly dividend total of $1,526, 1,300 euros, or 14.5k Swedish crowns. I could also add some covered call ETFs here, but I wanted to show you an example with discounting the dividend with the withholding tax. So I'm going to fiddle around with some numbers to see how much I would want to invest in my own type of high yield ETF, and I will slowly add my positions here and there. I'm also thinking about reinvesting every quarter so I can have a larger sum to divide between the holdings. I'm not sure about this. I could also transfer the dividends to my other broker and just leave this alone to produce income. What would you guys want to see? Should I reinvest in this portfolio so we can see the total growth over time? Or do you want me to transfer it to my regular account? Let me know in the comments. But that's it for this one. I hope you got some useful information from this video, like the discounting of the withholding tax or how to plan your portfolio. Also, let me know if I'm stupid for doing this high yield experiment. I'm the Swedish Dividend Investor, and I will see you in the next one. Stay smart, stay patient, and keep stacking those dividends. Ha det gött!